Hello, everyone. Big welcome from AFG Business and from one of the newest lenders to join the AFG panel, short-term mortgage lender Funding. Funding is a non-bank private loan company, and we're pleased to have their senior credit manager, Alex McAuliffe, and their credit analyst, Kai Donnelly, talking to us today about what private funding is and what their ideal borrower looks like. Now to Funding. Their product overview is available on lenders. And today, Alex will be showing us what they do and what they don't do. He's got some great case studies, which I'm sure will help you to better understand their finance offerings and how to identify and uncover the right opportunities. With that in mind, it's my pleasure to now introduce you to Alex McAuliffe, Senior Credit Manager, Funding, and their credit team leader, Kai Donnelly. Thanks, guys.
Thanks, Neville. Thanks very much for your time, everyone. Private lending, it's a very, very new sphere for a lot of people. Was for me as well. Just recently, I'm 40 years bank experience, so I understand exactly the difference between private lending and ordinary commercial lending or consumer lending. The big difference with private lending is we will look at deals that the banks won't look at. We'll look at deals outside the box. We will look at scenarios and situations that may come up, which may not come up in everyday life, and the banks will say no to, or will struggle on, and will move fairly quickly. So we like to look at, well, what we will be doing is we'll be examining private lending as a potential short-term solution for you. We'll let you know what our offerings are in the way of business loans, bridging loans, and also development and construction loans. We'll talk to you about the difference between banks and private lending and what the main difference is. We'll let you know what you can and can't do in private lending. And most importantly, we'll show you how to exit a private loan and in a way that will make you more money down the track. So the core clients for private lending. As per the slide, business loans, bridging loans, and development construction loans. Now, where we come into our own with bridging loans, and I'll take that one first, is in private lending, we have got the same constraints as what you would have as far as the NCCP is concerned. Where we come out on top there is we can go up to 2 years on a bridging loan for a client, whether it be consumer commercial. We do not require a sale contract as the banks do, and we will also do our servicing based purely and simply on the end debt. So you have a client come into you in the current scenario that you have out there at the moment, where someone wants to buy a house tomorrow or the next day. They haven't quite been able to put their house on the market or don't want to put their house on the market. What will happen is we will look at a new contract for them, a new sale for them. We will allow them time to then sell their existing property, probably make a little bit more money on it if they want to hang on to it, and fund both. So fund the sale and also look at refinancing anything they've currently got with who they have. We capitalise our interest and our fees so they don't pay anything through the course of the loan. Business loans, they're a real specialty for us. Someone comes in, wants cash out for a business, for any venture. As long as it's Australian real estate, we'll look at it. We would prefer first mortgage on all our bases if we can. And we would go up to 65% on a cash out basis. We do like to know what the cash out is for, and under AML, obviously, we need to totally understand what it is all about. However, we do that on a low doc situation. And development construction is one that I'll get Kai to talk on separately further on down in this webinar.
Yeah, absolutely. I'll move on.
All right, so what are the differences between private funding and bank funding? Well, you can see there, bank finance is serviceability. Okay, so it's all about serviceability. We will look at low doc situations. We don't credit score. Someone may have some adverse credit. we are prepared to look at it. We just want an explanation. So basically, we listen to stories. And if we listen to stories, we can make an informed credit decision based on what's available and what's around. Our turnaround times, we have settled a loan from go to woe in 3 days. We can do it normally within 2 weeks. Our big problem at the moment, obviously, is valuations. So if we can get around that problem, we're okay. Normally, contract to sale, we can work off a desktop valuation, which will speed things up a little bit more.
Yeah, I just jumped in there. Generally, it depends on how motivated the client is. If they're motivated to settle, we can generally get turnarounds in 48 hours if it's a straight purchase. But just to the client's needs. Cool.
Okay. Our interest rate start at 7.99. We are very, very event driven, and the purpose is what the purpose is. So we need to explain what actually that looks like. Our LVRs are 65%, which are a lot lower than what the banks offer. However, we do understand the difference between and the risks involved between our funding and what the bank actually does. For business borrowers, we lend out for just about anything. Okay, so we lend out for cash out, we lend out to pay out tax debts. This is going to be very, very, especially in the Sydney market, this is going to be something that may help a lot of your clients, especially with no income coming into their business at the moment. They may need some cash out of their existing security to be able to fund and continue to fund their business separate to what the government's given. We're more than happy to look at that. You want to go through the case study?
Yeah, of course. Now, this is a case study here. This is actually the first AFG loan we settled with you guys here. This is exactly the type of stuff we're looking for. A client was looking for a cash out against unencumbered property they used to fund some business cash flow. And we're able to get this one settled in, I believe, under about a week or so. So very clean, unencumbered cash out to client. They declared their use of funds, so it was quite clear. Yeah, it was a pretty seamless transaction here. Yeah.
Okay.
Cool.
So we covered bridging borrowers before, but I will mention again that we can do both consumer and commercial. So we can do NCCP and non-NCCP. We also specialise in, it's not on the slide, but we also specialise in dealing with older people as well, such as people who are looking to downsize. So typical scenario there is someone has an unencumbered property and they're in their late 60s, early 70s. They want to move into another property. They want to buy that house tomorrow. The banks won't look at those people because they're only going to be on their books for 2 or 3 months. We will. So what we will do, we won't take serviceability into account. What we will do is look at their exit being the sale of their existing property to enable them to downsize. Once again, we will give them a period of time to be able to do that. So we'll give them anything up to 2 years to be able to sell that property. We prefer that they do it a lot sooner, obviously, especially with the coded loans. However, we will allow them sufficient time to be able to do what they need to do with that property and then move into the new property that they want to move into for a short period of time.
And I'll just touch base on this case study here. Now, this is a perfect example of a coded transaction we dealt with. So this was a bridging loan we provided for a client recently for a couple of properties located in the Wurrunga area. Both these properties were pretty high profile, worth about $3 million each. The client was unable to show serviceability through a normal bank loan while holding 2 properties. However, because we capitalized the interest and the way we structured our product, we were able to get the client into this new property before having a contract on the sale of their current property. And they're now currently going through the process of selling that property and moving into this new one here. So perfect example of where the bank wasn't able to help out and we were able to come in and fill that gap there. Cool. Okay. Alrighty. And I'm just going to touch base on our building and construction loans. Now, this is really something we've been driving heavy for lately. Recently, our risk appetite's increased for construction and development finance. Generally, we'll service any sort of construction from your mum and dad's building their individual first homes all the way up to larger scale developments. Generally, with our product, we'll lend at about 65% of cost. Now, it's a little bit different to the banks who will lend at about 65% of GRV. However, generally, if the equity position is achievable and they can make it work within 65% of cost, or they have additional collateral to contribute, we can generally find a home for most type of deals. See, where a lot of banks will overlook owner builders and incomplete constructions, these are the type of areas that we thrive in. With our owner builders, we can lend up to a maximum 65% LVR, where a lot of other lenders will max out at about 50%. We can also assist with incomplete construction. On these, we'll look at it a case-by-case basis, but generally, if it's significant progression on the side, we can generally lend or set a limit of GRV and work them up to practical completion. In addition to that, we also don't have any pre-sale requirements for a lot of our construction and development loans. Because we lend at 65% of cost, which is already quite conservative, we don't have a requirement for pre-sales, which is also another niche that the banks aren't really hitting. I just want to reiterate, generally we will find a home for most of these deals where the banks can't, as long as they fit within those parameters. I know this is just a case study here. This is a perfect example of where we came in. This was a developer who was doing 11 units, and he was about 70% of the way through, where his private funder wasn't able to provide further funding. So we came in and set a limit off the end value of the project and was able to get him out of some hot water. He's now completed that project, 11 units completed, and he's now selling them down. So pretty straightforward for us, and we're able to control the drawdown of funds quite securely, and it was a pretty riskless transaction.
Okay, so the key elements to consider for us are the purpose of the loan. Our maximum LVR is 65%. Our loan term is anywhere between 3 and 36 months. Our loan amounts are up to $5 million. However, we will consider more on a case-by-case basis. And the most important element of private lending is the exit strategy. I spoke before about how this could work for you to be able to capitalise on your income. And the best way to do this is if you've got a client who is looking for a quick settlement, bearing in mind best interest all the way through, by putting them through someone like us who can get this deal settled very, very quickly. You can then look at refinancing that client at a later time or at an earlier time, right? Which means that you will not only pick up the commission from our deal, but you'll also pick up the commission from the refinance as well. Now, best interest there comes into play where a bank cannot or a non-bank lender cannot service within a certain period of time. We generally can do it and turn a loan around from application through to full settlement within 2 weeks. And that's stretching it at this point in time. As I said, we have done them in 3 and 4 days. So they are the key elements to consider. So private lending is all about the purpose and the exit. And if you have your exit secured, and the first question that any of my team will ask you is, what is the exit strategy? How is your client going to get out of this private loan to then be able to do what they need to do? In particular, anyone on a coded loan, where the exit is extremely important.
Yeah, absolutely.
Our interest rates start from 7.99. Valuation fees, look, as you know out there, valuation fees are increasing. The reason they're increasing is because the valuers are absolutely run off their feet. We've seen some ridiculous amounts being asked for valuations. However, we will fight all those fees at all times. We use a solicitor for all our conveyancing. We will also ask that your borrowers use a solicitor as well, not a conveyancer, to be able to look at the documentation, to be able to provide the appropriate advice to protect both you and us, especially in the coded loan situation. Our establishment fees are 2.5%. We have a deal with AFG regarding payment back to you for that out of that establishment fee.
And I'll just touch base on our construction finance. With that interest rates, generally we'll look at them on a case-by-case basis, but we have been pricing a lot sharper, so we can be a bit more competitive. Generally, we've been around that 7.99% for most category 1 and 2 locations as of late. Even recently, we're able to settle on a property future development site in Merimbula, which is like a category 3 location, and we're able to price at about 7.99%. So we have been a lot more competitive on rate.
So before we get on to next steps, the few things I do want to talk about and just reiterate is this: turnaround time. We've got a 1-day SLA. So basically, you give us a scenario or an application, we will have an offer to you within a day. We're a business built for brokers to benefit more customers. So in other words, we are there to help you and support you and fill the void that you've got in the marketplace. We don't credit score. All my team individually look at every application. We talk to you about your customer. We ask you about your customer and build a case from there. We listen to stories, not scores. We'll look at Part 9 debt agreements. We'll look at the conduct on a Part 9 debt agreement. We'll look at paying out a Part 9 debt agreement under certain conditions. Bankruptcies we'll look at. We'd like them to be discharged at least 12 months. However, once again, on a case-by-case basis, and our documentation is extremely simple. So we will do everything on a low doc situation. We don't do no doc, especially in coded loans. We have had requests to do no doc. We cannot do that. We do need to adhere to the strict requirements of the NCCP.
Yeah, cool.
So if you have any scenarios at all, please feel free to give us a call. Our team are happy just to pick up the phone and talk to you about any scenario you have rather than you send an application in. We'll be able to work it with you in such a way that we'll be able to work the deal or see if there's a solution for you for that deal. So if you want to go to our website, it's www.funding.com.au. That'll tell you more about us. And we may open it up to questions now.
Yeah. Pass it over to Neville.
Thanks, guys. Again, very informative. We have got a few questions. So I'll start from the top. Megan's asked, are you happy to look after clients that flip houses still within your LVR?
Yeah, no, of course. We could definitely look at that. However, we will have to be careful. If it is a consumer loan and they are living within the property, that would be selling their primary place of residence. So we will have to look at that on a case-by-case basis. But in terms of lending at a 65% LVR, it's more concerned about the location of the security. And if it's within a metropolitan area, most of the time we'll be at that 65%.
Excellent. And also lending on construction of NDIS houses?
Yeah, even recently we've settled on 2 loans, 2 NDIS constructions in Huntley. Generally with those, the building cost is quite significant. You'll find that the end value is probably less than the cost they put into the project. So we'll probably establish a limit of either cost or GRV, the lesser of the two. But in short, yes, we're happy to look at NDIS, but on a case-by-case basis. So feel free to contact me if you have any.
Great. What is the commission structure? Oh, you've covered this, but maybe just to elaborate a bit. Commission structure on this type and clawback. Just trying to confirm that there's no clawbacks or comments.
No, there's not. We capitalise all our interest on our deals, so there is no clawback.
Excellent. Chris has asked, do you look at larger 90 acres and land zone farming or rural? And there's an additional 2 resi properties as well.
We will. We'll take every case on a case-by-case basis.
Yeah.
So we will look at everything. There's nothing that we will say no to that we won't do at this point in time. We want to see the whole scenario. So we'll not only look at the security, but we'll look at the applicant as well, and then make a decision based with that in collaboration with the broker.
Yeah. Even recently we settled on a deal, I think was around about 60 to 70 acres in Tibbuk, which is just outside of Gloucester, non-cat location. I think we settled on that at about 60% LVR. It's quite a presentable property, but in short, we are happy to look at those larger sites.
Okay, someone just asked if you could elaborate on the application fee and the brokerage commission part of that.
We can. The application fee, we've got what's called an establishment fee. We don't charge any line fees. Our establishment fee is 2.5%. 1% goes back to AFG.
Very good. Any security restrictions in as much as postcode or minimum areas or rural or whatever?
It's not so much a restriction, it's more around LVR. So there's certain areas that we'll lend less on than other areas, and it's all based on categories. It's all based on the mortgage insurance categories that a lot of people know about.
Okay. Someone's asked a question that I think might be a bit off you a bit. What's required under LODOC, accountant letter or declared income suffice? You don't really go into that side of things, do you?
Oh, look, we do like an accountant's letter. We're happy with an accountant's letter. However, in this current environment and given the information that the government gave yesterday, there's going to be a lot of businesses running to their accountant, especially in New South Wales. We will find a workaround around that accountant's letter. So we may defer to BAS and bank statements instead, but we'll find a workaround.
Yeah, and in some instances where the exit is sale and it's not their primary place or it's a non-consumer loan, we would have to rely on any sort of income verification at all. If the sale is sufficient to clear out our loan, no income verification needed.
It comes back to the exit strategy, as we said before.
Yep. Very good. Is it possible to do an NCCP compliant bridging loan with funding through AFG?
We have done it, and we will continue to do it. Yes, most certainly.
Very good. Maximum loan term on private lending. Did you go?
Can I just go back on that previous question?
Sure.
Once again, bid comes into account. Okay, so if it's in the best interest of the client, and some of those best interest matters could be a speed matter, where we would certainly come to the fore in that instance.
Very good. Maximum loan term.
So maximum loan term, as per our product guide, is about 36 months. Generally, in some instances, if the client gets to the end of the loan term, they need additional more time. We can have an option to roll over the facility for a further 12 months or so if they need it. But generally, our product is short term, so we're not going to offer them those 5 to 10-year products. We'll cap it out at about 3 years, but in some instances, we can extend further if need be.
Now, can I just add to that? The longer the loan term, the less the LVR is going to be. So because we capitalise the interest, that comes out of the LVR.
Yeah.
So the trick would be to get into a scenario with a lower term or as low a term as you possibly can before you refinance. And that will give you the maximum amount of money you can have without any interest being capitalised.
Great. A couple of questions here. I'll just merge them. There's someone, must borrower be Australian citizen or permanent resident? And would Australian citizen residing and working overseas be acceptable?
Yes. In short, so what was the first one again? Sorry, Neville. We'll just
must the borrower be Australian or permanent resident?
Well, no, they don't. As long as they have they're buying. If they have firm approval, that's fine. And as long as they're purchasing Australian real estate, we're happy to help them out. And then Australian resident residing overseas. Yes, we've actually settled on a few recently of a client who lives in the UK, needed some cash out of some of his properties here back home to fund some business venture over in the UK, and we're able to successfully do that in under a week for him. So, of course.
An important thing to note there, though, is we only lend on Australian properties, not overseas properties.
Yeah, great. That's all the questions, guys. So far, we've still got 120 people on, so obviously great interest in this type of product. There are literally thousands of private lenders around, and AFG is very, very selective on who goes on the panel. There's a very robust due diligence involved, and obviously we're looking for lenders that put the borrower first. And have their best interest in mind, and that's definitely the case with funding, as Alex just pointed out. All about the exit strategy, I guess, the takeout and purpose is important, but also the security's got to be satisfactory. And then again, depending on the type of security, the LVR will vary accordingly. I think that's about it, guys, unless you guys would like to cover anything else.
We'd just like to thank you for the opportunity to be able to speak to the AFG family, and our lines are open. So please give us a call with any scenario.
Yeah, exactly. And yeah, same goes. I'm happy to have a chat with anyone and workshop any deals, particularly construction or development. Feel free to contact me directly. Happy to have a discussion around trying to make something that works for you guys.
Fantastic. Your contact details are on the presentation. If you'd like to talk to our scenario and support people as well, that's fine. We're very happy either way. Alex and Kai, really appreciate your time today and the presentation. Thank you very much for that. Thanks again, guys.
No worries.
Thank you.
Thanks,
Thank
Neville.
you.
Thanks, guys.
Cheers. Bye-bye.